Good evening, ladies and gentlemen, and welcome to our live webinar, Building the Banks of the Future Global Edition. I'm Tom Romansky. I'm your host for today's insightful journey into the dynamic world of digital banking. So as we stand at the cusp of a new era in financial services, it's more important now than ever to understand the trends, challenges, and the opportunities shaping the future of banking. And today we're privileged to have with us a panel of esteemed industry experts who've been at the forefront of digital transformation, spearheading innovations and strategies that are redefining banking as we know it. With us today from Lebanon is Jocelyne Chahwan, Deputy CEO and Head of Retail Banking at BLOM Bank. Jocelyne is one of Lebanon's most prominent voices in the banking industry and was actually the first Lebanese banker on Visa's Advisory Council for the Levant. Welcome, Jocelyne. We
Good
have
morning.
Good morning. We have with us also Raimundo Zandamela, founder and CEO of Muvicapital from Mozambique. A serial entrepreneur, Raimundo has founded multiple businesses, including a successful advisory and consulting firm, an insurtech company, and a technical education institute. And his latest endeavor is building Mozambique's first digital-only microbank. So welcome to the panel, Raimundo.
Thank you.
And we have with us Omar Mansur. Omar has spent several years helping banks and financial institutions on their digital transformation journeys, from integrating digital initiatives into their business to launching full-fledged neobanks. Omar is currently working to support digitization in the APAC region. Glad to have you with us, Omar.
Thank you so much, Tom. It's a pleasure to be here with such an esteemed panel.
Thank you. And unfortunately, I extend apologies on behalf of Paulo Salcedo. Paulo was meant to join us from Maybank Philippines. However, unfortunately, due to COVID, he's had to pull out of the webinar. So we wish him all the best and we wish him a speedy recovery. And we'll hopefully be able to have him on one of our future calls. So without further ado, let's jump right in.
Paulo, if you're watching this, I hope you get well soon.
Hope you get well soon, Paulo. So let's jump right in. And I think, Jocelyne, it would be wonderful if you can start us off in this discussion. So digital transformation is a bit of a buzzword in the banking industry these days. So I wanted to ask you, what do you believe are the most critical internal cultural shifts that banks need to make in order to fully embrace innovation and digitization?
The most important element to succeed in the new world of transformation and digital transformation is to remove silos, to change the structure, the classical way of we look at things in departments or in functions. Historically, the way you look at, let's say in a bank, you would see like the IT, you see operations, product, innovation, business. And typically the business or the person in charge of getting a new partnership used to be on its own to get this lead or this business or this partnership and submit kind of request to other departments, the type of partnership to get the necessary approvals and move to implementation. Of course, you will have always internal discussions to make it happen, best direction, etc. Today, things are handled differently in digital world. When you start a partnership, you might see in the room different people from C-level all together. It's not the business anymore in the room alone. You might see like the CIO in the room from day one, and it's part of making the deal. It's not like making the deal and we implement. So with the digital transformation, the people should accept that business people to have that technology on their sides, and the other around on the other side. If you go to the IT, let's say the internet banking platform once implemented years ago, it was like a IT toy, okay, when it started, okay, a lot of functionalities, not necessarily the customer experience is that important or discussed with the right people. Today, all this shift of culture have changed. You see in the room, IT, business, product, innovation, all together discussing everything. Everybody should be involved in any initiative. No committees. It shouldn't be done in a committee base. We do a committee and we decide. It doesn't go like that. has to be at all levels. We have like a kind of tribes at the bank working together on many initiatives at the same time. Like it's not like someone will do something, the other one will have it. Doesn't work at the same time. Same initiative, same time. No decision making through committees whatsoever. You have to be agile when you move to this new culture. It has to be quick. People are empowered, and we need all levels. The culture of having tribes at all levels to make it happen. So it's a big shift, and the banks that used to be agile and successful in the classical way of doing business, or the old way of doing business, that will always be successful in the new era. It's not like you wake up one day and you become agile and you become and you remove everything. It's a culture that you already have at the bank, or if you don't have it, I don't believe a bank is here today if they don't have a minimum type of changing drastically or being agile and empowering everybody from all departments, removing those type of, as I said, committees or decision making only at one level. You need all the specialists all together. If we are talking about strategic partnership, it can be C-level involved, less strategic or less critical at another level, but they can handle and they can move, etc. So this is the way I see the change of culture. It takes a lot for people to accept someone else doing similar job in the past or vice versa, or have a say and giving his input in this. This is major in terms of mindset and the way we have to look at things.
I think that's a very insightful point. I think you're very right. I mean, digital transformation, and I like what you said. I mean, it's not just an IT toy, right? I mean, it's really a change across the whole organization, and everyone has to be part of that. Raimundo, maybe I can kind of get you to continue. How have you seen, what Jocelyne's mentioned about kind of bringing everyone into the room and making sure everyone is on the same page and working together? How has your experiences been in Mozambique and in Africa in terms of that, cultural mind, or the mindset shift of bringing everyone together into one room around the digital transformation project?
First, thank you, Tom, and welcome everybody to the webinar. I think lately technology has been the go forward in terms of all the business transformation, and banks have been basically the punching bag, on why are they not being fast in doing the digital transformation, why are not innovating as fast as possible. And I think this is comes on the area or on the era where we have more fintechs coming in and involving, and business also involving. Obviously, this pushes the banks to involve a bit more, be able to look at the market, look at the status quo, and involve within it. This involves, I think, not only the strategy within the bank, not only the culture, but the mindset that's basically, within the leadership and the management of the specific bank. Obviously, you have to look at factors like, size of the bank, customer base and all that. But it comes to the point of, what is the mindset that is within the team? What are they trying to achieve? What is the competition? And what, and foremost, the client is looking for. I think once we have that mindset, inputted into our leadership, into management and all the banking team, it's easier to shift around, allow the transformation of the bank, because it has to happen within the all verticals of the bank. It's not only, technology. Technology, is a tool. It comes as an enabler of a business continuity. But there's more specific areas where we have to look at that's basically more, business driven. that has to allow us to look at technology and see how can we use it to allow us to do that transformation and serve the customer on the best way possible. So if you look at the market where we are in Mozambique, for my own experience, most of the banks that you have here are innovating. I would say they're not innovating as fast as the market is, requesting. But that comes on a point where banks are making profits, and they basically stable where they are, so they don't have the need of looking at various areas of their business and cannibalize their structures to allow this more called transformation ideology. So I think that's that from my point. If we're able to create a mindset within the organization, get from top to bottom, banks are not democratic; it's more decision-driven organization. So if decision comes from the top and say, okay, this is what we have to do, this is the customer that we have to serve. The customer is looking for A and B and C, and this is the way that we have to be positioned on the market. Just scales down to the rest of the team, and things can be done.
Yeah, no, that makes sense, and I think it's interesting. So there really is, whether it's in the Middle East region or the Levant region and in Africa, that similar kind of thing. The top down versus the kind of almost, I would say, bottom up kind of approach, of digitizing. And I mean, I guess you're right. If there's no need to change the business model, but I guess that is maybe where there's a lot of why maybe some banks or incumbents end up falling behind, right? Is because they don't change in anticipation of what the future holds. As you said, Raimundo, they kind of think, well, our business model is fine now, so why do we need to shake it up, right? And then the market moves so quickly that suddenly they're caught unaware and kind of very quickly behind the trend, so to speak. I think, Omar, maybe you might have some good insights on that. Obviously, you've dealt with banks and business leaders across the world. Is that kind of trend something that you see when you've worked in engagements? I mean, do the incumbents kind of wait too long and then have to rush to kind of adapt, or is it a case of not wanting to shake up the status quo? What is the mindset that's, let's say, preventing the banks from innovating as quickly as some of the fintechs that we have?
Actually, honestly, there's no, in my opinion, I don't think there's anything stopping the banks from changing the mindset. The banks already have the mindset. The same principles that were there when digital banking and in general digital transformation came up back in 2015 onwards, they are still the same ones. But what happens is that you have a fintech that's a bank tends to assume that it's because it's a bank and it's an incumbent and it's already been there. So they tend to seep into a comfort zone. Discussions are always going on about how to innovate, but there's no rush priority around it. So what happens is when you have a fintech or a smaller institution that just shows up and it disrupts the entire market with an offering that the bank typically is expected to offer, what happens is a bank is caught like a deer in headlights sometimes, or the incumbent organization. And the rush job of it to catch up to that ends up being like a half cooked product that goes into the market that not only reduces the proposition, but completely defeats the purpose of what it's supposed to do. So the best way to actually tackle something like this is to, yes, give it the necessary priority. You don't have to be the first to market, or don't have to always be the one that goes in the market the first, but you have to give it the right priority so you do it correctly. Because the main priority should be to set a benchmark for that particular change or that innovation that you're bringing, not just copying what the other person is doing or just trying to put more of an incumbent stamp around it, that just because I released it, it's the best. No, you should give it that priority that I might not be the first in the market, but I want to do it right because customers don't care if you're the first. Customers care if you give them that care.
I think that's a very good point. I'm not sure. I might be quoting wrong. I think maybe it might have been Steve Jobs that said it's not actually necessarily the best to be the first, but it's better to be second and actually do something better, right? So I think, yeah, not necessarily having first mover advantage, but actually delivering the best experience or the best digital bank or best app is more valuable than just being the first, right? So I think that kind of segues us nicely into the kind of next topic discussion that we want to cover. And I think, Raimundo, maybe you can start us off on this one. So, of course, we've all been kind of dealing with various digital initiatives in small and large scale forms. But I wanted to ask you, what are some of the common obstacles or bottlenecks that you think financial institutions, or even fintechs encounter when trying to adopt cutting edge technologies and innovation, and how can they overcome them? And I think, Raimundo, you can tell us from your experience, even from past experiences, what are the common obstacles and bottlenecks that you see, and how can they be overcome?
Yeah, thank you, Tom. You see, I think, we were basically talking now about culture, how can we basically transform that to drive, technology or innovation within the banking. I think there's, a few bottlenecks that the banks are facing, or even the fintechs, obviously on a different scales. We cannot compare, the banks that are already operating, they have a plane on the air, they have passengers, and then they have to change a windshield, or an engine. It's not that easy. When it comes to the fintechs, it's a bit much easier to do changes, because there's no the same structure, the same size of the infrastructure that a big bank and a small fintech has. It's different. So the fintechs have got a bit of advantages on that, but also on the mindset, as I was referring to. So when we look at I think the challenge is, there's the legacy technology that the big bank have, and they're struggling with transforming that technology legacy that they have, which I think for my thinking should not be the right strategy. They should think how can we basically develop more on the customer user base, on the CX, and then evolve on the on the legacy technology with time, because that does not happen over time. Rather than trying to change everything in one go, it doesn't happen. Banks are a bit more risk averse. Obviously, there's a reputation that comes on the line. As I was saying, there's the customer base. When the bank is big, it's like turning an elephant to look the other way around. It's hard. I can imagine. You also have regulatory framework issues, and in my space, I think that's the most difficult area. That the banks really have the challenges. Dealing with the regulators not easy. Is a challenge every day, and we leave that in the first hand. I think also beyond all that, it comes back to the mindset. What are the mindset among the banking leadership? Because that's what basically drive the innovation, and that's basically is the biggest bottleneck that the institutions are facing. We can talk about culture, we can talk about regulatory, we can talk about anything, but when there's the right mindset, in doing the transformation, in allow technology to help, and to be the forefront of the banks, it's easier to shift things around, and I think this is what has to happen. The banks need to change the mindset. They need to stop thinking that they have to compete with the fintech, but maybe partner with them. They will never be in the same pace. The pace that the banks involve and they operate would always be different. There's the big structure that they have to deal with. There's the processes they have to deal with. the fintechs, have got a different mindset. The banks are more driven on the product. The fintechs are not driven on the product. They're driven on the customer experience, and that's actually what is the most important right now. This is basically what the customer is looking for. What is the experience, that they're dealing with the banks. It's not by the fact that people are now basically not betting on the banks because the experience is not there. But if they keep, fighting with this old technology that they have, the mindset that they have, that they're fine where they are, they're making the profits. Obviously, 5 years from now, they will find themselves, struggling to copy. And you can look at that. If you look at the bank sector and you look at the various segments that they have, if you look at the corporate side of it, yes, in the next 2, 3, 5 years, maybe it won't be a big change, because a corporate bank, investment bank has what it is. But if you look at the retail, at the SME segment, that's evolving, and that requires a bit more of technology of customer experience, way of dealing with things. And this is where basically the banks will lose on, and they will lose track, basically, if they don't focus on that, if they don't focus on the customer need. So on my way, on my thinking, I think that's where the problem is sitting within the banks. We're all facing challenges. But I think we have to look at it and say, okay, how can we partner? What us as new incumbents can bring that the banks are not feeling afraid of or scared that we're going to take their market, and also what the banks can actually leverage from us, and that's it.
Okay. I really liked your analogy of it's kind of like, big banks are like a plane, and then your, technological innovation is like asking to change your windshield while you're flying the plane, right? I mean, it's a pretty big endeavor. Jocelyne, maybe you can kind of give us your input on that, because I think, Raimundo touched a lot on customer experience and kind of I would say the retail banking side of things as well, which I know is something that you're, very, knowledgeable about. Are there any unique, let's say, bottlenecks or obstacles that you've seen in whether it's Lebanon or the Levant region when it comes to, cutting edge technology or collaborations to move a bank forward or to pivot?
I'm very much like Raimundo. I totally agree with what he's saying. The regulator is, of course, always an obstacle. Let's say you are in a digital world and you have to keep some data on premises, not on cloud. Just to give you a small example of the type of challenges that you can face. Here in the region, we have the political and the economical problem. Lately, it's been a while we're going through many challenges in this region, and specifically after, let's say now, short term, after 7th of October, definitely the pressure is everywhere, but you still have to move on and look forward to the positive stuff. You have to be productive, innovative, present, and you should have this denial mode, just moving forward. You can, I will put them more under challenges, not obstacles. It shouldn't be considered as obstacles, because if you look into things around you, you just stop, and this is impossible in our business. Things are moving very, very, very fast because of the fintech. What Raimundo is saying, we have the same challenge here. We have more than 10 wallets approved by the central bank lately, so we have new players. Again, I agree with Raimundo. Do we compete or we partner? We choose to partner, of course, with them, to deal with them. They have the nice customer experience, nice onboarding experience. They have the teams for them. They have their branding, their everything. So we choose to partner with those players. And today I'm talking about the local players, the new challenge that we will have very soon, the regional players, or maybe the international players come to the market. So this is the challenges that we are facing a lot. Raimundo mentioned something very important about also the legacy banks and what kind of transformation we do with what's happening around us with the presence of fintech. Definitely taking the direction of transforming a bank, a legacy bank, is like a suicide. The best approach would be to have like some people would call it a digital arm, or because we are a product, like he mentioned also, it's true. Maybe you can start somewhere with your digital initiative on the side with a new toy, new baby, new product, whatever you want to call it, and you can move forward. And this again will require partnering with fintech. Omar mentioned something important, not necessarily to be we're not the first, by the way, we'll not be the first in many things when it comes to digital, maybe, because when we deploy our digital arm or product, it has to be done properly. Sometimes you see already we see in Lebanon some initiatives, some wallets, we are looking after something that really, and if you look into all those wallets, very similar, like same product, same features, same thing, different colors, different thing. We are trying today, we know that will not be the first to go live with something nice. It is a priority. Also, Omar mentioned something very important. Is it a priority to go digital? Is it a priority for a bank like us to be present among all the players? Of course, it is a priority. And again, if you want to go live, you cannot do it on your own. You'll go back to the fintech present instead of rebuilding things from scratch. Time to market is important. Not to be the first. We agreed it's not the most important thing, but you cannot left behind, like waiting years to develop yourself, and reinvent a bank the way we used to do it for years to make it happen. This is like transforming a bank is a suicide. Rebuilding a bank from scratch digitally is another suicide. So you have to you have to cope. You have to partner with fintechs. They did it already. They have, if you want, like I would call it the core, like basic features ready. This is where you add to it your flavor, your customer experience. You customize it. And you add the equity and branding on it, and this is the magic. You need to have uniqueness, of course. You need to have your value proposition different from the market, and sometimes if it will take you more time, not years, I'm talking limited time to go, this is the best approach to make it happen.
I think that's a very, very well considered response, Justin. And I think you're right. It's the balance, right? You don't want to necessarily be first and just totally disregard the customer experience. At the same time, you can't wait, 6 years till everything's perfect. You have to, kind of give and take a little bit. And partnering with fintechs, as you said, is kind of a good way to sort of get to market, quickly enough with a great product as well.
Exactly.
I think that kind of nicely ties in with Omar, maybe the next point that you can kind of start us off in, which is really about that idea of partnership and collaboration, right? So as Jocelyn said, banks often do partner with fintechs and startups to kind of drive innovation. Are there some maybe examples you can share with us of how you've seen banks and fintechs collaborate to create a really winning customer experience or a totally unique product, or even just like streamline their operations?
No problem. And as Jocelyn had basically said earlier as well, banks do need to collaborate with fintechs. And if you think about it, banks and fintechs have actually forged impactful collaborations, revolutionizing the the financial landscape to prioritize, customer-centric experiences and operational efficiencies. One of the more notable areas of synergies, which lies in the realm of, let's say, for example, payment innovations, partnerships with fintech giants such as Square or PayPal, they've always empowered traditional banks to offer cutting-edge payment solutions, fostering seamless, transactions, enhancing the overall customer experience. The collaborative approach between fintechs and banks, not only caters to the ever evolving presence of and preference of tech-savvy consumers, but also propels the banking sector into a more agile and like an innovative space. Another pivotal example, and I'm going to say this because COP28 just ended yesterday. There's a lot of fintech platforms that are coming up, and what they're doing is they've started to commoditize carbon credits, and now they have started to look into the space of how can they tie up ESG into the financial sector as well. And another one that I've seen, and especially around fintechs and banks both working together to co-create something, is pivotal collaborations that arise, in the digitization of lending processes by joining forces. Fintech companies specializing in alternative lending, alternative data. Yeah, banks have started to streamline loan applications and accessibilities, addressing like diverse financial needs of customers together. These collaborations signify a paradigm shift in the banking industry from where the fusion of traditional banking expertise with fintech innovation creates a dynamic ecosystem that is customer focused, efficient, and at the forefront of technological enhancements as well.
Thank you, Omar. That was a very good insight into kind of from the sort of partner perspective and open collaboration. Raimundo, is this something that you're kind of seeing as well in Africa? I mean, we talked about like mindsets and cultural shift, and regulators. Everyone seems to have it out for the regulators, causing challenges. But how do you see kind of the collaboration with fintechs and startups in Africa, and that collaborative, let's say, co-creation concept in finance happening?
Yeah. So I think when we look at the space where we operate here, there's still a bit of challenging within, finding a great collaboration with the other players and with the banks, big banks, as we name them, because they still see the new incumbents has a challenge for them. We're coming to take the clients, to challenge them, or to compete with them. But I see it on a very different level. The fintechs and the incumbent banks, there's areas of the financial services that they're not interested in tapping in. Okay, if you look at the lending, side of it, as Mansur was mentioning, fintechs are not really interested on the lending because that's very capital intense requirement. But the banks can actually take on that because they have that financial capacity. The fintechs are more easy, are more flexible, are more driven in terms of customer CX. They're more driven in terms of how they do stuff, how they provide a great services, which is different from the bank that has got this whole the whole elephant culture that they have that makes it difficult for them to easily evolve. So that's where I think the partnership should lie on. If we look at in Mozambique, we have M-Pesa, which is basically the fastest e-wallet that's scaling rapidly on the markets. It took very, very long time for the banks to accept them as a partner. M-Pesa, I think now is operating for more than 10 years in Mozambique, but only in the last 5 years they've only been able to connect the wallet with the banking, because the banking were actually they were not allowing it to happen. So if the banks allows more collaboration, I think they're more to get advantage on that. They're more on the winning, and they're more on getting the transformation even easier and faster than closing to collaboration. and this is what we have seen here. I think what I'm saying here does not create problems with my friends from the banking, but maybe it's also a call, for them to wake up and say, okay, we have the same markets. Mozambique, for instance, is a market that if you look at the average age is 17 years old, 18 years old. Those young people, they're not looking at opening a bank account, with a traditional bank that has got this whole processes to get a bank account open, but they're looking at a more flexible way, how they can open a bank, allow them to trade stock, to invest, to do certain stuff that they cannot do on the traditional bank, and the traditional bank can, focus more on the lending and what they're good at, but if they don't see that way, that's going to be a really, really, challenge, I think, even more for the banking, even more than the fintech itself, because they actually, the fintechs are more on the doing, they wake up, they do stuff, they find challenges, they overcome them, they're on the go. It's different from big banks that are trying to transform, that have to fight with culture, have to fight with mindset, have to fight with technology, that they're using and all that, and they don't involve.
Yeah, I think that makes that's a very good point. Actually, you kind of mentioned, the doing versus the let's say overthinking, right? Like the fintechs kind of as they say, they move quick and break things, right? Whereas the banks, I guess, want to move quick and break things, but they don't have that liberty because, as you said, they have the big regulators, they have the big customer bases. So it's like, how do you move at the speed of a fintech, but you're still kind of restricted a little bit and held back. And I think that's where I guess the collaborations can sort of work. And, as Jocelyne said, some of the banks, are opening digital arms or launching neobanks or sort of separate entities with unique brands. And I think maybe, Jocelyne, you could tell us a little bit more about that in the region. When it comes to like a big bank, launching, let's say, a sub brand or a neobank with the young, let's say, twist on it, or a e-wallet or whatever it might be. How are banks kind of approaching that? Do we rebrand redevelop ourselves, or do we launch something unique? What is the approach that you think is maybe more successful or less successful for banks in MENA?
Okay, I'll give you our example. Let's say I told you before that we're not the first to launch our own product or digital arm to make it happen, but at the same time, maybe you are the first to partner with a fintech that it has its own wallet. Today, BLOM Bank in Lebanon has 75 branches, and this entity that we partnered with 3 years ago has 1,400 point of sale. It's a remittance company, the largest in the country, 70% market share. So wanted to target the youth, the unbanked. So instead of going under our umbrella and with our own product, the best approach was to partner with such a player, such a fintech, who has its own wallet and go live. It's the most successful program in the country. We're really proud to do it. We attracted all the youth, all the unbanked. It's their presence across the region, the country, and maybe we'll have plans to go outside Lebanon to go to the region. This type of initiative, digital initiative, the onboarding is done through their wallet, their thing. We are acting as a service provider. Banks should accept to partner and not to just compete or do their own thing. And sometimes we think a product, it has to be BLOM bank used whatever thing. Sometimes it's not the case. You can target those ones by partnering with the right people, the right reach, the right network. And if your partner is agile, young, and he has it all, he has nice value proposition, and you play as a service provider behind the scene, they have the what matters for us is to make it happen. reach those population. We don't have any way to reach all those unbanked or use across the country. We have 75 branches, and those people, they need to upload the wallet we have. It's a little bit specific, as we are a cash society, so we didn't reach the point that we are fully digital. So the need to have access to card, even if you have a wallet, it is regulated this way, and it is very important at this stage in Lebanon. So all this required like point of sale and touch point with an agent, and it is present through this partner. So even though you are preparing on the side your own thing and finding the way to be present in the digitally to your customer and be relevant, at the same time, meanwhile, you can do many partnerships, such as I told you, with the remittance, and we did another one with a telecom, and we are creating kind of an ecosystem among our partners. And when you have wallets everywhere, this is where the magic will start, because those card holders or those wallets will start connecting. And in this case, where is BLOM? BLOM is the bank servicing those wallets, not competing, and maybe one day we'll have totally different, connecting again with all this ecosystem created by us. So this is, I believe, the attitude of banks. You can do it on your own. You can partner with your people. You can create your ecosystem among many players. You need diversity. You need different backgrounds, and this is the best way to maximize your reach in a community and in a country.
I think, yeah, that makes a lot of sense. I mean, you're building an ecosystem around let's say you're at the center. I mean, the banks are the specialists in the products, and whether it's lending, cards, but you connect with all these different fintechs and partners that are doing whatever they do really, really well. Like you said, e-wallets. So why try and reinvent the e-wallet when someone can already build it well, and you can just plug into them, and you do what BLOM Bank does best, and they do what they do best, and everyone sort of wins and builds that community around your products and services. I think that kind of leads us nicely into a question that I had for Raimundo, which is a little bit more, let's say, like regional specific now. Of course, we've been talking a lot about digitization and banking and fintechs, and obviously the big underlying connector or requirement for that is infrastructure and connectivity, right? I mean, if we don't have the internet, a lot of these different services and products that we're talking about actually don't really function properly. So Raimundo, from what you've seen and what you've experienced, in Mozambique and in Africa, I mean, I know that infrastructure and connectivity can be a kind of particularly unique challenge in that kind of region. So how are you seeing fintechs and banks build these types of ecosystems and connectivity, as Jocelyne mentioned, within limitations of infrastructure or limitations of connectivity, and making sure that these services are available to everyone, in remote areas to cities to very rural areas. How have you seen that challenge be addressed in Africa?
So I think if we look at the bank industry 5-6 years ago, the banks were more involved into building branches, scale their branches all over the place. We have seen few banks, building container branches and putting solar panels in a very, I would say rural areas, of the country, along Africa. However, specifically in Africa, or in Southern Africa, Sub-Sahara, there's a big of shift within the banking. How the banking is basically taking the expansion, and how they basically expanding to onboard the last mile customer. And this has shifted, obviously, because it's hard to build branches on those places. Logistic cost, investment and all that is hard. And on top of that, you still have, the internet, the communication that comes along. So nonetheless, the challenges that you still have, when it comes to communication, when it comes to internet penetration, which is still low compared to the rest of the world, but still, considerably fast as we look at how it's evolving, year by year. Um, there's much that has been done, and there's much that is being doing that we have to look at. I was mentioning now, the e-wallets, in Africa, which is the biggest, driver for financial, inclusiveness. You have mobile money that's basically now penetrated more than 70%, or even more in most of the African or sub-Saharan region compared to the banking services. So that's itself, it's a very great a win for us. And also it helps us build that culture. It helps us build the needs of the understanding of the population that they have to bank on the banking, they have to bank on the financial services, and make sure that the financial services are there where they are. So yes, to answer your question, there is big challenges when it comes to infrastructure, but I think from where we were 5 years ago and where we are now, we're in a very different space. And I think 5 years from now, we're looking at a very big shift also when it comes to both infrastructure and financial services as all.
Yeah, that makes sense. I think, innovating in kind of new ways and using like more like GSM networks versus internet, etc., can really be a big change. And I think, mobile money and M-Pesa is really like such a big case study in Africa, on how to kind of bring financial inclusion to the people in a way that really kind of works for them. I think, Omar, this is kind of a nice point that Raimundo mentioned about, kind of, various countries' stages of development and kind of how we adapt. So, when we look at, whether it's, in Asia Pacific or in MENA, there are quite a lot of countries that have various stages of economic development in kind of one area, right? So how have you seen, at least in your experience, whether it's the banks or whether it's the fintechs, kind of tailor their digital transformation strategies and offerings to accommodate both, right? I mean, you might have regions where you have a very highly developed market, people are very familiar with digital services, through to, places where, mobile phones are really kind of, just, advanced forms of mobile phones, let's say, are not so commonly used. So how does a company cover kind of both in their digital transformation strategy, do you think?
Okay. So I'm going to use a live example of how we basically approach it, or when we work, because we work in both tier one markets and then emerging markets as well. So you have to read the room when you go into each region or a country as well. You have countries that are very well developed, like Singapore or some European cities. And for them, it's more about financial convenience. It's about accessibility for these things, for financial services. Whereas if you look at emerging markets, it's more about financial literacy and inclusion. So it's never a one size fits all approach for both developed countries and developing countries as well. You have to tailor your product or your platform to be able to cater to both. So, for example, in Singapore, you have a lot of companies, or not companies, you have a lot of propositions by banks that are being coming out. That's just standardization of your mobile banking services, because the infrastructure is so well built that you don't need to reinvent the wheel. Most of the times it's more about getting the customer the most out of their money, or how their money can basically work for them. Whereas you have countries like um, Saudi Arabia, where certain parts about a very large percentage is unbanked. They don't know what to do with their money. They don't know what their money can do for them. So you have fintechs that are coming up and saying, why don't you invest in gold? Why don't you invest in fixed deposits? Why don't you invest in savings, different types of savings platforms? You have this amazing platform that I've been using called Sarwa as well, and what that does is it allows a normal person who has absolutely zero financial literacy to be able to explore, options where they can save or invest in international shares and stocks and sort of get their money to work for them as well. With us as well, what we did was we've tailored our own platform in a way that it caters to both first world requirements, and at the same time that same platform can be configured to cater to emerging markets. So that's the best way to look at it. And APAC is one of the best use cases because you have a tier one country, which is Singapore, that has almost anything and everything under the sun. And then you have other regions around it like Cambodia, Vietnam, who are still developing and emerging because as the infrastructure evolves, the capabilities go up, but the people's literacy on on the financial stays the same. So it's basically getting everybody up to speed in a nice balance. You can call it a digital financial martial art of sorts.
I like that.
Omar, do you know that the founder and CEO of Sarwa is my son?
Yes, we had a brief conversation around this. I really like this platform quite a lot. I use it quite often.
Yeah, yeah.
I'm still waiting for him to give me my referral on the app.
It's a very interesting thing, and I'm surprised to hear because I actually use Saro as well, and I was kind of mirroring, what Omar was saying. It's something quite different and unique, and it helps build your financial literacy as well. I think that's quite a nice thing. Maybe Jocelyne, you can maybe tell us a little bit about how that how you've seen that apply in the Levant and the Middle East, where you have again a lot of more developed and less developed markets, right? When you're delivering, or as a bank, when you're coming up with your customer experience that you're trying to create for various customers, how do you look at, what are the developed and underdeveloped markets? Do we create different products for each? Do we create one product that'll elevate one market? How do you kind of approach that from a digitization point of view and customer experience point of view?
In Lebanon, in terms of connectivity, infrastructure, we are good. We have a good penetration, reaching 90% of the population. So, and we have a good coverage, even in the rural areas. And this is where we find out the success of this partnership with the remittance company, with the wide network. We were able to do a very nice experience and very nice numbers related to it. So when we targeted the unbanked and we were thinking rural areas, less developed, we were very surprised by the success of this initiative, the way people took it. They enrolled because, as I told you, it was a very nice customer experience. At the end, it was relevant. And today in Lebanon, for example, it's all about payment at all levels. Due to the crisis, people are less interested in deposits, in savings, and therefore banks are not attractive today in lending. We just started the lending basically lately in very limited products. So the game, and let's say in a country like here, it's about payment, but the payment is not the same if you look to the social economic factors. So you have to develop different products, different experiences. It's not one thing for all. I don't believe this is feasible. You still need to do some customization. You have to target, and you have different language, different experiences, different needs. The features are not the same. The sophistication. Let's say if we talk about the same example with this remittance, there is no point to talk to those people about loyalty example program. They don't care. Give them good price, discounts, cashback. They want they are more after that price sensitive more than value creation. They want something reliable, available, make it happen fast, practical, convenience, cheap to access, versus other segment that might be very sensitive to value. Let's say you just mentioned this sophistication about footprint carbon, to have like to be eco-friendly, to have some loyalty, to exchange their points with this carbon footprint example, type of things that they need to feel relevant to their communities, to humanity. You have this sophistication in with some customers, and you have the other one, just move, just make it happen, and give me the service. And of course, this is where the bank should develop, maybe with different partners, different, or even with this same one, but different experiences and different value proposition. If I look at the region level, if we go to Jordan, for example, very similar to our country, and we have a good presence, definitely we have a difference between the two countries. It's not, we don't deploy things that successful in Lebanon necessarily will be successful in Jordan, for example. You have to go deep dive to the culture, the behavior. Again, you can learn from some success stories, or you can try to deploy, but before that, you have to go to the market, look at the cultural aspect, forget about the legal, it goes without saying, but the cultural, sometimes the wording, the approach, small details. If you don't look into those stuff carefully, you can succeed in Lebanon and fail in Jordan, for example. Sometimes the language in one word in anything can change the branding, the pictures, the culture are not the same, and we are aware of that. So it's not like a mother bank deploying their footprints across. It's one thing, it's global, and it used to be functional, Tom, before. More and more we see, no, it's market related, culture related, even it's digital. The customization is more needed at this level than in a classical way. Some people would think the opposite. It's for everyone. It's not true. It has to be very customized.
Yeah, that makes a lot of sense. And I guess the, kind of undying business principle is there, whether it's an incumbent or not. You have to know your customer and listen to your customers, right? And kind of speak in their language and deliver the products and services that they crave. So I will just, I've been sent a couple of questions. So I think because we're getting close to our kind of end time, I think we can field a few questions from the audience. I have quite an interesting one, and we didn't really touch on it too much in this session, but I'm sure we will in the future one, and that's AI. So one audience member asked, how much impact do you see in the future of banking services from the ever-evolving generative AI in place? And I think anyone can jump in if you have a view on that. So how do you see generative AI affecting your kind of or the future of banking services in your regions?
Okay, I'll start with this.
Yes, please.
Okay. Lately, I attended a seminar in INSEAD related to AI. It was very advanced one, and my perception to AI, it was another technology or another toy in technology. It happened to be, no, it's not at all. It's for business people. And AI is not something that something like you install it in your bank and you have AI. It doesn't work like this. It's a business thing, it's data analysis. And you have to be specific how do you want to use AI. Let's say you can say, okay, I have my call center, let's say, and I have like those data that I can share and try to, before AI, we used to put like rule base. We used to be scripted. The chatting today, as we speak, we're still using our real agent talking to you. With AI, if we are planning, by the way, to start introducing it, but it has to be project based and specific as a mission at the bank level. And we have to tell, okay, today this is what we have. We have to share data. And this is the way we're doing things. We are scripted. This is an AI. If you introduce it, might give you. It's not like you tell him if you say hi, say hi. It's not like before. It's not like automating some kind of things. You might be surprised. The output of this technology can be really beneficial and innovative in a way, but in certain frame that you decide. But definitely we'll use it in different areas where you see the need is.
Yeah, I think you're right. It's kind of AI is how you use it, right? I mean, I've seen some very weird things come up in the way people have used AI, but of course it can be extremely beneficial on so many levels, right? Like you said, chatbots being one of them, and business analysis. Raimundo, how is AI kind of affecting things in Africa and in your kind of business?
I mean, I think so we're moving to an era where basically we see things differently, we do things differently, and we're basically now on the shift in terms of how everything is pursued and how everything is done, and sought. And I think the AI, it comes on a moment where we also, as humans, and as financial service providers, have to think, where is this technology going? Where is this AI thing going? Where are we? How can we involve into it? And how can we make use of it in our own benefit and on a benefit of the customer that we serve? It comes with benefit, but also comes with I would say consequences. So there's specific layers within the banking or even other industries that the AI will be replacing the human force. If I look at the banking sector, for instance, and I look at what we're doing right now in terms of technology, there's various sides or blocks of the business that at this point we don't require a human to perform that activity, but a AR technology can do it. We're looking at how to manage data, how to learn from the customer, how to actually know a bit of what the customer has been doing in the last 5 years, and what are the predictions of this specific customer, and then be able to build a product that is tailored to that specific customer. That can only be done with technology, and AI is coming to allow us to do that. So that's the good part of it. But when we look at the other side of it, there's people that are losing jobs and they have to shift around. So this transformation, process that we have to go through, leveraging technology or leveraging the AR, also have to go back within our structure and see how do we transform this on the smooth way, in order to allow everybody to come along on this transformation. So that's how I see the AR, making its parts on technology. In Africa, in Mozambique, in more particular, I wouldn't say much. In the last few 2 or 3 years, when it comes to what the AR is bringing. But I will bet that in the next 3 to 5 years, we're not going to escape from that, because that's where the market is going to. So for us, it's also a point where we have to reflect on it, and more than reflecting, now trying to look at ways to adapt to it and leverage it in a way.
Yeah, makes sense. I mean, you can't escape progress, right? As they say. Omar, I think we have one good last question, because I'm conscious of everyone's time as well. So someone was asking, if you think about a typical banking experience or a typical customer experience in banking in 10 years' time in the future, what can people expect, with all these innovations and kind of crazy progress that we're seeing? what could a customer's journey look like in 10 years when they're dealing with a bank?
This is a very, very broad spectrum one, and I think for this one, this is more of like a what can we become, not what we will become. It's
Of
like
course, yeah.
if anybody has children or they have played video games, they can basically see where banking is going to go into. It's like you could have how you have chips in your credit cards and your debit cards right now. You could have something embedded to your fingerprint where you can walk up to an ATM and you can just access your bank account by just using your fingerprint, which I believe some places are doing or experimenting with biometric accounts they've created these propositions where a customer does not need to carry their wallet with them. As long as their biometric is registered, they can it reads their fingerprint or their retina scan, and then it accesses that particular service. Another one is carbon trading, carbon credits. People before were using carbon credits to calculate how much their consumption is. Now it's sort of started to pivot and switch from loyalty points, because people collect loyalty points, but out of that loyalty points, how many people use it? But when you have that capability to say that, hey, I used my BLOM Bank card, my BLOM Bank issued credit card for a coffee shop that I did for every month, and I accumulated this many carbon credits. What can I do to offset that? Now, to make that more interesting as well, you can say that you can do carbon trading as well, where you can trade a carbon credit with a friend and say, hey, listen, I'll offset this many trees if you can get me XYZ redemption on your carbon points. I say this is just spitballing some of these ideas. Another one is I'm sure everybody has seen the mixed reality pin that has just come out, where that AI pin that
Yeah,
allows
humane AI, that one.
humane AI, exactly, and the kind of features that you're bringing into it. So the more we progress forward, the more we are marrying the Internet of Things with the traditional financial services as well. And now, if you look at it, banks, one of the most successful banks I've actually digital banks that I've seen, and they did not reinvent the wheel. What they basically did was they said that, look, we're a digital bank, we have virtual branches, nothing brick and mortar. So the money we save on the operations of those or the overheads of those physical branches, we're going to return that to the public and give you very competitive interest or profit rates. So in Dubai, back in the day when I believe digital banking had come up, savings accounts were at 2.5, 2.7% interest rate, whereas the global inflation rate was much more. So it made no sense to put that. But people weren't uh, knowledgeable about what product can, counteract the global inflation rate. So what this bank basically came and said that if the global inflation rate at the time was 4.5, we're going to give you a savings product that at 6%. Everyone went nuts. You don't have to reinvent the wheel. You don't have to create something bombastic and out of the box. Sure, it's nice, but it will be seen more as a marketing stunt as opposed to an actual problem you're solving. So, in order for any bank to progress in the next 10 years, you have to look at two things. What problem are you solving? And does it tie up with the MO or your modus operandi that you're going ahead with? Because one example is mixed reality, right? If I can wear a pair of sunglasses that tell me what my closest ATM is, or even better, we're working on a product internally as well, and I think my R&D is going to kill me for this, is giving the P2P ATM capability. So if let's say you need cash, and for example, best example is Lebanon. If I was to basically look for cash in Lebanon, I'd have to go to an ATM, and being not from Lebanon, I'd have to pay like $10 or $15 just to withdraw cash. But with a peer-to-peer ATM capability, I could use that with one of the partner banks we have and see if there's somebody in the vicinity that can give me that cash, and they can earn a commission on that as well. These kind of innovations and problem solving is what I see banks in the next 10 years solving, and actually in the next 2 years. And that's tying up with what Jocelyn and Raimundo have basically said, tying up with fintechs to enable this ecosystem as well. That way, you solve uh, the slow moving stigma that incumbents have, and marrying them with the agility and speed of fintechs to co-create a harmonious financial ecosystem.
Thank you, Omar. That was very good look at the future and what we could kind of expect. So everyone, I think we've run a little bit over time now, so I think we can say this is we can conclude the webinar. We've answered a couple questions. The other ones that we won't get to, I'll answer in the chat. But I'd like to thank everyone. Jocelyne, Raimundo, Omar, thank you so much for joining us. I think you all gave really wonderful insights, and we're very blessed to kind of get to share that experience from you. And I hope everyone enjoyed the webinar, found it insightful. And we'll have another one coming up, I'm sure, very very quickly to share with everyone. So again, thank you everyone. Thank you to the panel, and thank you to the audience. And hope everyone has a fantastic day.